Welcome to Volatility 411 for Equity Armor Investments. I'm Joe Tigay. Let's jump right into it. The S&P 500 is having a nice rally today. It's up 60 basis points. This is coming off of a 3-day sell-off where we got a significant risk-off mood. We saw the VIX rise from below 20 up to 25. Today we're pulling back on the VIX back down to 23. And we had that tremendous rally prior to that sell-off. We saw the June lows all the way up through August, really strong rally, and it still remains to be seen whether or not we're going to follow through to the upside or that rally is just going to turn into another violent bear market rally, which we've seen in the past. And there's reason to argue both ways. For the bulls, very strong case of saying, hey, inflation peaked. If you go back historically, every time inflation peaks, that corresponds with a bottom in the market. Now for the bears, they can just say, well, wait a minute, we have an inverted yield curve, which is leading to banks being a lot more tighter on who they're lending to. Every time that happens, that leads to a bear market and a recession. So what still remains to be seen, and maybe today's consolidation is really looking to Jackson Hole. We have a lot of uncertainty as what the September rate hike will be. We know there'll be a rate hike. It could be anywhere from 50 basis points to 100 basis points. The market would like to see some certainty. In the VIX today, we're getting the biggest trade I'm seeing is a sale of the SEP 22 puts for 80 cents. That's an interesting move. That's one way to play long volatility by being short volatility. And of course, that's been the trade du jour, or the trade of the year, I should say. If you look at the S&P 500, the trade of the year has been to sell an upside call. If you look at the VIX, the trade of the year has been to sell the downside put. For Equity Armor Investments, I'm Joe Tigay.